Comcast, ticker symbol CMCSA, headquartered in Philadelphia, is the largest American multinational telecommunications and media conglomerate. The company owns several well-known brands such as NBC Universal, Xfinity, Peacock, Sky, DreamWorks Animation, Universal Pictures, and Universal Studios. The last 5 years has seen the stock price have a lot of highs and lows, in the last year alone hitting a 52-week high of $43.72 and a 52-week low of $28.39. If you have been a long-term holder, this chart looks much better, with a steep upward trajectory all the way up to $61.72 in September 2021. The pandemic definitely helped the momentum continue with everyone stuck at home, so realistically, taking the pandemic out of the equation, the price is almost in line with what it was pre-pandemic. Having a look at the dividend history, the yield is currently 2.73%. Looking at historical data, dividends have been consistent, with a 16-year track record of dividend increases. The total return CAGR for Comcast stock is 11.46% over the past 12 months, the 3-year 5.03%, and 5-year CAGR at 6.58%. The total return includes any dividends reinvested. Compared to competitors, Comcast has performed very well, very consistent over the last 20 years. Only the behemoth of Netflix has performed better, with the last 12 months have been incredible. Disney are trying to turn things around, but still a long way to go. Let's have a quick look at how it's performed against the S&P. In the last 10 years, compared to the other stocks we've compared recently, it has performed the strongest so far. If you'd invested $10,000 and reinvested the dividends in that time, your value would be $23,269.58, a total return of 132.69%, and average annual return of 8.81%. The S&P would have given you a 222.82% total return, with a value of $32,282.08. Interestingly, over the 22 years, it has been very close to the S&P performance. Something to think about when choosing your investments. If we have a look at the financials, the market cap is currently $175.47 billion. Payout ratio is 82.09%, which is a lot higher than I like to see. During the past year, the average payout ratio has been 31%, and the highest it's been is 89%. It's something I would monitor. Revenue has been consistent. Growth has been really impressive if we look back over the years. EBITDA is good. Free cash flow has had a bit of a drop-off, but after the pandemic, not surprising. Net income and EPS have followed suit. They have a lot of debt, $88.77 billion, which is quite high. It is dropping, but so is the cash reserve, so another thing to monitor. Dividends we've looked at, nice consistent growth. Shares outstanding, fairly consistent with buybacks, which is good to see. Q2 happens on July 26. It's expected to beat Wall Street estimates with 98 cents a share and roughly in line with estimates on revenue of $30.2 billion. Q1 earnings saw revenue down 4.25% year on year, but was still better than expected, and EPS was beaten by 10.92%. Now, what do the analysts think the 12-month price target could be? CNN Business have an average 12-month price target of $46, 8.4% upside from where we are today based on 28 analysts. Tip Ranks have a price target of $46.63, 9.87% upside from where we are today based on 17. And Zacks have an average buy price of $45.58, 7.4% upside from where we are today based on 19 analysts. We have a look at value investing, and the intrinsic value based on the discounted cash flow, it is coming out at $50.27, 18.4% upside. Trading multiples is 54.1% downside, coming out with a fair price of $19.49. Earnings power 58.6% upside, coming out at $67.30. And the dividend discount cash flow model is down 50.8%, coming out at $20.88. A varied outlook. An average price of those four models is $39.49. Alpha Spread has a worst case, base case and best case scenario. The worst price is $39.61, very close to the average price of the four models. Base case is $56.60, which would see a good return and the best case, an unrealistic return of $132.39. I think we would need another pandemic or major acquisition to see it get there. If I was being conservative, given the worst case and a 20% margin of safety, this would be coming out at $31.68, which is still a lot higher than its 52-week low. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.